Hello, Warriors, fasten your seatbelts. Fed Day. How's everyone doing today? So a lot of people complaining about a lack of volatility. I think that here we got volatility, everybody. Hello, Kevin, Vince, Vin, V, Zia, Warriors. Okay, so we talked about this possibility of the dollar making a new low, euro making a new high. My preferred short, just off the cuff, going into the Fed, it's going to be cable between here and 820 and risking the high of the move. We talked about the potential of the Dixie making a new low. See if that's happened. That has happened. So all the stops are gone here. One point I do want to make, it's not just price, but how price gets there. So it may have to do a little work here because it's actually under 30 here. What's the reading? Yeah, 23 on the Dixie. So I want to short the relative weakness. The relative weakness to me is cable. I think that what cable is doing right now could possibly be corrective. And I'm going to get the crew on here with me to talk about this. Okay, so we talked about the euro possibly making a new high. We haven't quite done that.
Good morning, Dale. This is Blake.
Hey.
I just want to let you know I'm here.
All right, buddy. So I guess it was a weak CPI and the market thinks the Fed's going to ease today, huh Blake?
Well, I mean, it's, yeah, I mean, I think the market's now going, oh man, this might be a dovish hike versus a hawkish hike.
It's such an oxymoron, isn't it?
It is, but you know, the thing is and I know I stated this the last couple of days is that the dollar has been really weak and it looks vulnerable.
Yeah.
And you know, I'm such a bozo. I was if
no,
you
you're not.
No.
I grew up with bozo. Okay, I grew up in Chicago and Bozo the town. All right, so I even went to one of his programs and got to throw a ping pong ball in the buckets. I know you young guys don't remember Bozo.
I do remember Bozo actually, but we had here in Arizona, we had our own version. We had Wallace and Ladmo, which is
oh yeah, because I lived in Arizona for a while and people used to talk about them. But anyway, you think that Wallace and Ladmo would be looking at this weak dollar and saying, well, are we going to get a continuation collapse, or is this going to be an opportunity to buy into dollar weakness? And I'm thinking you think maybe not.
I don't know. Like I said, I was a little bit of a bozo today because I actually shorted the dollar yen 100 pips ago this morning. If you have, if you're a ForexAnalytix subscriber, you got an alert on the dollar yen when it hit 110.30 this morning, and it hit a 50% retracement trendline resistance at 110.30, and I said, you know what? What's my risk here? And go look at the basic update for one that's on the very top of your screen. It says new update for dollar yen basic technical analysis. You see that one? Yep, that one right there. So if you click on that, you're going to see, now go to the 4 hour because the 1 hour is just an update. Now that's a following, but there's a 4 hour chart.
That was an I told you so.
Well, it wasn't a.
I know you know.
I don't like to do that.
Blake doesn't like to do that. He will never do that, and I do it occasionally.
Well, here, look. I shorted it at one because look at the risk. I mean, pull up that chart.
Right at the line.
Yeah, it's like my risk was above 109.50, and it's like okay, and I was in the middle of chatting with you guys as the retail sales numbers were coming out, and so I closed my dollar yen at 108.88. So that's my bozo move today because it was happening. We were chatting. GoToWebinar, and I'm like, okay, I'm just going to take some quick profits. I didn't think it was going to drop 100 pips.
Here's my reaction to it, and I know you're being humble, and of course we all want to be perfect, get in at the best price, get out at the best price, but I guarantee you that there would be a lot of people out trying to buy clown suits if they picked up 130 pips with immediate gratification in 10 minutes.
Yeah, it was. I mean, it was fast. It was really fast. And I happen to be short some U.S. dollar Swedish krona because I was, I've been trying to play that thing to the short side. But I had to take profits ahead of the Fed because what I am doing is I'm long a little bit of gold, small size, but still profitable, extremely profitable at this moment. I'm long some gold because of the 38% retracement that it stalled on yesterday. And and I want to stay long gold into the Fed because if they do deliver a dovish hike, gold may spike a little bit more. And I mean, it's tempting, it's tempting when you got a nice profitable position to pull it off the table. But at the same time, I already took some profits in the dollar yen and the dollar Swedish krona, and it's like, okay, I need to hold on to something because my original play, and people that trade with me on a daily basis, they know because I talked about it yesterday. I'm like, my goal was to get profitable in gold, and for it to be above 1270 so I can hold it going into today's Fed. And because I've been a buyer since 1264, so that's where I own it. So now I'm sitting in a 12-point profit, and I want to have the ability to be in a situation that if the dollar does get creamed today, which it's already getting hit, but if it continues to get hit, then I can have a really nice position if gold ends up breaking above 1,300 in the coming days.
You're very good at trading your plan. That's the old expression, plan the trade and trade the plan. So that's your plan.
That is my plan. It's been my plan the last couple of days. But here's the thing, I'm glad you brought that up. I'm good at trading my plan, but I'm also good at trading around my plan and screwing things up. So, and I know that sounds funny, but I'll tell you, if I always just traded my plan, I would do much better than I do. But do you know what I am? I'm also human too. So I get lured, just like any one of you guys and gals, I get lured into positions because it's like, it looks attractive right now, so I'm going to do it. It wasn't in my original plan. It wasn't even it's like a plan I just kind of conjured up because something looks attractive at this moment. But if I really plotted out my trades,
it's an experienced impulse. It's and see, you can get away with it more than someone who's inexperienced, Blake. Okay, so it is an impulse trade because you see something, you recognize it, but you're recognizing it on the fly instead of few hours before.
That to me, it because of maybe my experience, it works against me sometimes because sometimes I think I'm smarter than the market, which in all actuality I'm not. So, but I'm aware that's one of my weaknesses, and I know that if I really just plan things out and only trade with my plan, I'd probably be a lot better off. But like I said, I am human. I'm susceptible to being lured in the markets at certain levels and certain prices, and there's certain setups that look too good to be true, which usually if I hadn't plotted it out days in advance, I can end up screwing things up. So sometimes it works in my favor, sometimes it doesn't. But
let me ask you this, Blake, though. I get your biases and nice trading and everything, but if I put a gun to your head and said, Blake, I really want to use this news event and even the Fed, because, it may not happen now now or until after the Fed to fade dollar weakness, would you say that the pound would be the best candidate because of what happened last week, and it's only retracing compared to the dollar index, which I think is a stop hunt? I could be wrong. We could get continuation. Would that be a preferred short in your mind? If you wanted to fade dollar weakness, what would you do?
Yeah. I mean, if you put a gun to my head and you said, "Hey, you gotta buy the dollar," I mean, the pound is obviously underperforming today. Which, you know, the employment data, you had your average hourly earnings that came in a little, or average earnings index rather, that came in a little weaker than expected, even though the jobs number came in better. But the pound has so much, you know, there's so many other different cross flows right now that you got to be really careful with it. Like, for example, an article that was right on the front cover of Business Insider, which is Business Insider. I know we contribute there as a company, but Business Insider to me is kind of like People magazine to like my wife. You know, my wife, she likes to read like all the gossip stuff on like celebrities. You know, like for me, I like to read Business Insider because it's more entertainment than anything. But they do have they have good, you know, I think the business content is good.
Blake, did your wife feel sorry for Brad Pitts with what he went through last year? And no. I call him Brad Pitts. You know?
Yeah, I noticed you called him Brad Pitts. I would say no.
Okay.
Yeah, no, she's not. But anyway, but on the front cover of Business Insider, or the front article, was about the UK and how Theresa May could cancel Brexit altogether. And I was reading it, and they have a lot of opinion pieces. Obviously, we put out opinion pieces on Business Insider as well. I didn't necessarily agree with their thought process on canceling Brexit all together, but you know, those are risks. I mean, you know, let's say, you know, Brexit was called off. Could you imagine the pound would be trading at 140 so fast? You wouldn't even know what to do. You know what I mean? So there's, you know, so
I don't know if the EU is going to let him do that.
No, well, I mean, you heard Macron yesterday. He's like, you know, the door's open for that. You know, until they really start the process. They could back out, you know, of this, you know, this.
What a wild world, man.
It is. I mean, because, you know, one of the things is a long time ago in a land far, far away, a lot of people thought that the Brexit vote would be used more as a negotiation, you know, tactic, not actually going through with it. But, you know, obviously Theresa May coming in as Prime Minister has made it to, you know, a point that everybody believes that the Brexit's going to actually go through. But how about if she backtracks? How about if she says, you know, I didn't get majority in Parliament, and I'm just not going to have the negotiating power that I thought I was going to have. So, you know, let's just call it all off. I mean, could you imagine? I mean, I'm not saying that that's going to happen. I'm just saying, if you think about that, and what would happen with the cable? I mean, like I said, we'd be trading at 135 to 140 so fast. Oh, it would make your head spin. So, you know, going back to, you know, for today, is the dollar better played against like the cable on the short side? I would say yes, for today it is, but I don't know if that's something that I'd be, you know, interested in trading longer term, being, you know, short the pound. But anyway.
See, I wasn't even aware that banter was going around in the market. Like, so, you know,
I mean,
that's interesting. You know, so there again, your point, you know, I look at the charts, and if I didn't know that, you know, it would be, to me, a layup rally to sell somewhere. I think that we'll challenge lows that we made last week before we take out last week's high, just a probability bet. But you're right, tempers it a bit.
Well, you know, so here's the thing. I don't think that's going to happen anytime in the near future. Yeah, it would have to be more of a hit and run thing. If you're an intraday trader, you don't really think about that as much. I move pretty large sums of money right now, so therefore I have to, you know, obviously take a little bit more of a macro approach to what I do, because I have to make sure that my themes are more in place for longer term. And it's not like I never get caught off guard in the markets, because I do, but I try to take a more longer term approach, meaning that if I'm going to short the here, and I got to show you a couple charts anyway, so I'm going to take over the charts. You know, if I'm going to short the dollar yen, I have to also be thinking at the same time, okay, because I did, you know, I shorted the dollar yen, even though I only made, you know, whatever it was, like 40 some odd pips, because I shorted it here, I closed it here, because I thought, oh, you know, when it broke down, it was just a little false breakdown. You know, I know the data was weak, but I'm like, oh, okay, there's going to be a little false breakdown, you know, ahead of the Fed right through here, just tripping some stops. So I decided, oh, I'm going to cover right there. But actually, that's probably what's happening right now. Is, you know, we tripped a bunch of stops, and, you know, I wouldn't be surprised if the dollar yen bounces back to like 109.50 ahead of the FOMC. But again, the reason why I shorted it is because I'm thinking more. You know, I was thinking that it was just going to drift lower ahead of the Fed. Well, no, I was thinking, okay, well, if you know, we get a little bit of risk aversion, I was already looking at the bond market, thinking that bonds are going to rally. And I was like, oh yeah, they did. They rallied significantly. I mean, you know, we just, you know, ripped higher out in the bond market. You can see the bond market just flying. But I was thinking at that time that you know, if I short the dollar yen, I could actually sit in it for, you know, a week or two, and I have no problems being positioned short at that price. Like I said, in this environment, I've been very fast to take profits off the table because we just haven't seen a lot of volatility. As you guys know, volatility is at a record low. And,
why are they saying on CNBC that currency volatility is higher than stock volatility? So currency, okay, so we're at extreme lows in volatility in currencies, and you're right, because remember the other day you were a little early on a euro short, and it rallied about, I don't know, 30, 40 pips. And I commented to Steve, you said it's spiking. And, you know, I said, remember when the euro really used to spike? You know, it'd be 100 pips, 90. And now we call 30, 40 pip moves a spike.
Well, that's, you know, it's very typical of summer trading anyway, when it's non-event trading. But like, I mean, I'm expecting volatility this afternoon, obviously following the Fed. I don't know how much more volatility we're going to get because of what happened just, you know, an hour ago. But regardless, when volatility, like, you know, stock market volatility, which is the VIX, is low, volatility in currencies is going to be, generally speaking, much lower too. So, and there's no like measurement that I know of that you know, is like Forex market volatility, but you know, our ATRs, you know, the ATRs are contracted a little bit compared to what they normally are. So, you know, a euro dollar ATR might be about 70 or maybe even 60 pips right now, when, you know, typically in the fall or where we have periods of higher volatility, it's probably closer to 85 to 90. So, so for me, like the dollar yen, when I was up 45 pips, I'm like, okay, I'm going to pull the plug on this, because I'm like, oh, this is just going to die down, you know. But you don't know when volatility's going to, no, you don't know when volatility's going to spike like that. I mean, it and then it just cleaned out a bunch of stops. The unfortunate thing about today, and let me talk a little bit about today, is if the Fed has a dovish hike, the reaction from the dollar is not going to be as pronounced. We may still get some dollar weakness from here, but the question I have is, well, how much? I mean, you know, you got the dollar Canadian has already broken below 132. As you can see, we're breaking this major trend line here. We broke through 132. The US dollar Mexican peso just pushed 1790, which is support. The dollar yen has broken down by 100 pips off the highs. I mean, we might get a little bit lower levels, and maybe the dollar yen takes out the 109, but you know, how much, unless the Fed just straight up doesn't hike, which isn't going to happen. Steve made a great point yesterday about the Fed and expectations on what they would or would not do. They're going to hike because the market is expecting it. 96%. Maybe that's dropped to like 90% after this morning's data, but regardless, it's well above 60% threshold where the Fed's just not going to surprise. Not Janet Yellen's Fed. If it was a Greenspan Fed, it might be a little bit different. But Janet Yellen's Fed or Bernanke Fed just ain't going to happen. So,
well, I mean, if they want to do it, it's better to do it here with S&Ps at new highs than during a correction. If it ever happens. So they have plenty of cover to do it here with asset market.
It's a free ticket, free ride for them. So they can raise rates and not worry about, significant market impact, because what would happen is if they surprise the market and they didn't hike, the dollar would get absolutely clobbered today. And the dollar yen would see sub 108 today, and the euro dollar would be at 114 and on its way to 117 the next couple of days. It just isn't going to happen. But again, I think now that we've seen such a dollar move, that now we might have a protracted response, or maybe a more of a benign response. Now they could be. Yeah, Steve.
Good morning, mate. Good morning, Dale. Good morning to everyone. I'm 110% in agreement with you, Blake. I think that the moves we've seen this morning make a bullish reaction from the dollar after the Fed's decision, a quite likely scenario, because now even a neutral hike, a hike that will not involve, dovish language or hawkish language, is definitely going to be dollar positive, definitely. Because now, especially with the CPI, it's more than obvious that the market more or less is tilted to expect a hike with dovish language. So if the dovish language isn't there, or if the dovish language is very weak, so it's barely dovish, I think we will see a positive reaction from the dollar. So I think going into this announcement, being short the dollar is, I'm not going to say, it's wrong, because as you said, a very dovish hike can still bring more dollar.
So let's say 70% of the dollar weakness is done, 80%. Who wants to trade it for the last 10 or 20?
Yes, exactly.
At least near term, right, Steve?
Yeah, the risk reward in the short term is not there. More chances of getting yourself out of the money a lot than, getting into profit.
Like you look, okay, so here's an example, the euro dollar. So what I expect today is the Fed, does deliver a hike. It's maybe not so dovish, or it's pretty dovish, and the euro dollar spikes to 113.10, 113.15, and then just comes right back off again. I would take, if you're short the dollar and we get some dollar weakness, you probably want to use that opportunity to exit. You know what I mean? That's the way I look at it. And again, I'm not short the dollar. I'm long gold, and I'm going to probably use any spike up in gold to just take it off, because I expected this move to happen a few hours from now. Now, Catherine just asked a question. She goes, "Hey, Blake, Paulie's been saying that the Fed definitely won't hike," and that's Paulie from the Morning Edge.
Right.
And she goes, he sounds so certain. Do you think he might be right? I don't think so. I think he's going to be wrong. I think the Fed will hike, but like I said, if they didn't, that would be the first time. The first really big surprise that we would see from the Bernanke Fed era. So if you think about Ben Bernanke and Janet Yellen, who was his understudy, if you will, his right-hand woman.
But like Paulie and you, buddy.
Yeah, I guess. But the thing is she is not the type of Fed governor that is likely to hike, and that's why, or likely to surprise. That's why I think that the odds are very, very slim that she, stands pat. If she stands pat, like I said, the dollar would get demolished. I don't even know what the stock market would do. The stock market might actually go down, because people would start thinking, oh my God, what does the Fed know that we don't know? because a lot of people go, oh, well, if the Fed didn't hike, that's going to be easy money policy for longer. We're going to get long stocks. But I actually think the stock market would spike to new highs and then reverse and collapse because, like I said, people would probably start to think, oh my God, what does the Fed know that I don't know? And like I said, the chances of that happening, Catherine, are way slim. Way slim. There was another question that was asked by Jack. Jack asked if I'm still long the Aussie New Zealand. I am. My cost average is right here. Again, the whole reason why I want to be long the Aussie New Zealand is because of what's happening this afternoon. Not the FOMC, but the New Zealand GDP. Which, remember, even if the New Zealand GDP beats, it's looking in the rears anyway, and then you have Australian employment reports. So that's the big, that's the big deal for today, and I'm staying long as we're above 104 solidly. If we close below 104 by the end of this evening, if we're below 104, I probably will pull the plug on my trade. But I think the Aussie New Zealand's been beaten down enough where I think because they're expecting a weaker Australian jobs report, not like a weaker from last month, still a positive jobs report, but a weaker. If we get a positive reading in Australian jobs, I think we could trade above 105. We trade above 105, we're probably going to see 106. We see above 106, we're going to 108. So, my plan is
trading your plan, buddy. You're trading your plan.
Yeah, it's just, I don't mind. Like I said, as long as we're above 104 or above 104, I don't mind being long. Yeah. We get above 105, I'm adding. Above here, I'm adding. We get to 106, I'm pulling profits. I've got
about it. Even here, it's a pretty low risk FX trade, risking 60 pips or so for 100.
Yeah, and one of the things you have to also think about it from this other point of view is I've already booked profits. So I was long. I've been long at 104.50 basically where we're at, and I sold a lot of my position at 104.86. Yeah. Mm-hmm. So my cost average is actually a little lower if you think about it because of what I booked. My cost average is probably like 104.30. So it's, for me, it makes sense to stay in it. I don't have any problem doing it. But if I were like not in the Aussie New Zealand, what I would be looking for is a break above this trend line right here. If I was sitting here listening to this webinar saying, okay, well, I don't want to really buy it ahead of this risk, which makes sense. I would just be a buyer above 108 or 104.80. 104.80, if we break above that, then this is because this is the trigger for me to add. Like, I'm not adding until I see this happen. So
yeah. I'm not an Elliotician, but you could almost look at the low from early June ABC up to that 105.70, and we're putting in a higher low ABC for B, and there's a C to come. Even if you're long-term bearish, if you're bullish,
you're way more of an Elliotician than me. I get lost at D, so I'm like ABC. And
it could be an A, B, C, and the C is starting, and it would take it to your target if it had equality, right, Steve?
Yes.
Luca asked. Hey, I'm sorry. Luca asked one more question, Steve. I'm going to address this because I got to go for the open.
Okay.
Here, he just asked if I would add gold if we broke above 129 or 1295. Right here, yeah, we'd have to get a daily close, like a significant hold close above this, and I'm going to buy with both hands if we get especially a daily or a weekly close of, by the end of this week. If we end up over here, I will be long gold quite aggressively actually, and short the dollar quite aggressively too. That's
you still like the pound crosses?
Yeah, I'm down a little bit. They pulled back. They pulled back actually pretty significantly, but they're still above my stops. My stops are below the 200-day moving average in the pound Aussie, the pound New Zealand. Actually, I'm not too far from my stop here in the pound New Zealand. I better look at it. Okay. My stop is. my stop is not too far away. Put it this way, it's within 100 pips away of the market. So I mean, you know, I'm hoping they bounce. I don't like how the pound's acting today, and I think the Kiwi and Aussie are very strong this morning. But we'll see. We'll see what happens following the FOMC. Anyway, yeah, Steve, I got to get hopping. But what's up?
Okay, mate. Okay. No, I wanted to ask you a question before you go. But if you have to go. We'll do it tomorrow.
No, what's up? I'm giving you the card, by the way.
Yes, it's a general question about hikes. I had this conversation on Friday with Dale. Why do you think the Fed is hiking? I know it's a very general question. Let me help you. Do you believe that the Fed is hiking because it believes that the U.S. economy is strong?
No, I think it's hiking. No, I think it's hiking. I firmly believe that the Fed is preemptive hiking, because they know that we're getting close to a cyclical period in the markets, where in the economy, where we're going to be probably suffering a recessionary period for maybe a couple of quarters, and they need the tools in their toolbox to combat it. I don't think inflation shows enough.
Just a rhetorical question. Just a rhetorical question for people, you know, food for thought. What if they believe that we are building serious asset bubbles all over the place? Could they say they think so?
No, I don't think, because they're very adamant in not telling the market what is a bubble and what isn't.
So what would they do if they thought that's the case?
Yeah, I mean, they're probably building up enough rate hikes, so in case they have to cut once or twice. Or
trying to stop them before they become too serious.
Yeah, they
create another event.
Reduce.
Yeah, they're a little late. They're a little late for that idea, but yeah,
yes,
that could be.
You know how it is. If they're even more late, then whatever happens afterwards is going to be even more severe, right?
Yeah.
Yeah. Hey, I'm sorry, I've got to run.
Have a good day.
See you guys. All right, good
luck hunting, Blake. Steve, take it away, man. Is that your screen?
Yes, that is my screen.
All right.
Okay, come on. After so long,
you have a lot. You have a lot to update. Let me ask you this. You know, sometimes when you walk in and you look at the screen, sometimes your first idea is your best idea. So I came in, you know, we were having some software glitches with the meeting room, but I came in and I saw this big action, big flush in the dollar, and my initial reaction was, where's cable? Because cable, you know, it's amazing how short the memory is of the market from what happened to cable last week, that I think is more important than what's happening in cable today.
Okay, I'll begin by giving you an update with all my positions. First of all, I had a short in the Kiwi from here, 72.20 roughly. Okay. Yeah. I'm still short, and actually I'm not recommending to anyone to do it. I just added to that position at 73. Wow. So yes, so now I have a cost average that is almost at 72.60. I still like it. I still like it quite a lot. This is a contrarian trade. This is a trade, you know, that if you don't feel comfortable about, don't do it.
Hey, they look the best at the top and the worst at the bottom, don't they?
Yes, likely, and I'm willing, you know, I've had the last 2 months have been very good to me with trading, and I'm okay. I might book occasionally some losses, but I feel good with it. We have the 88.6 of this move down at 73.10. We have the 78.6 of the whole move down at 73.40. So now I've set a stop loss at 73.60. I don't like to put around numbers like 73.50. So I avoided that. I put 73.60, and that's where I'm going to take the stop loss if that actually reverses. Although there is a likelihood, if I see some huge spike up during the Fed, that I might temporarily remove completely my stop loss, because I don't want to be, you know, I don't want to be a victim of, you know, a spike higher. So most probably I'm going to remove the stop loss completely and manage it, you know, as we go for the first minutes after the Fed, because I still like it, and I still believe what we said before, that the risk reward is that with the expectations being what they are at the moment about the Fed language that we will accompany a hike, that we're going to see some strength in the dollar following it. That doesn't mean it's going to happen, but I believe that the chances are tilted that way. Of course, that's a hypothesis. That's why we manage. Then,
well, I see that you've convinced yourself. So,
yes.
all right, sometimes self-talk. Go ahead, buddy.
Yeah. I've only convinced myself about the chances.
Right.
But you know how it is. I mean, I haven't convinced myself that this is something that's going to work, but I've convinced myself that this is something, let's say, that has 60% of working or 65% of working. And
yeah, it's always like that.
Yes, exactly. And my job is what? To go with the best odds. That's what I'm trying to do here. So that means that even if I'm right, 4 out of 10 times I'm going to be wrong, right?
That's right.
But that's absolutely fine. That's absolutely fine. Now, having to do with cable, and then I'm going to give you my position on cable as well, because you heard it. Listen, I wrote yesterday in the analysis that 128 is a critical level. That being said, and since I had decided to keep my Kiwi, when we tested 128 today and we went back to almost where we began, I booked profits on cable, because that, whatever it was, 30 something, it was 34, I think, pips on cable, because I didn't want to have more dollar exposure. But I re-added those positions again now that we came close to 128. So I didn't plan of being short cable as well ahead of the decision, but I'm also short cable now, once again, ahead of the decision. And I'm going to use the profit I took to finance my stop loss in this.
Nice. Nice money management.
Okay,
I was just going to say that, sometimes, Stephen, I don't know if you've experienced it, but I have. And I've seen other traders at times when you're in the zone and you've had a big run, there's a little tendency for hubris. And Coach Popovich says, like when you go into a casino, you convert your currency into chips because they're not as real as cash. And when you look at your account, it's just digits. So I tell people, you've had a big run, pull out some equity. Yeah, your broker won't like me, but pull out some equity, maybe, invest in something more conservative, buy a gold coin, or Stelios would buy a silver bar, or take a vacation. And then when you spend it, it becomes real. And some people don't really enjoy a run that they've been on, and instead they say things like this: well, it's the house money anyway. Well, you know what? It's your money now. Indeed. And protect it like it's your principal. It's not the house's money. It was. Indeed. It could have been, but it's not. Anyway, that's my homily for today.
Indeed. By the way, I'll tell you a little story, to be educational. Everybody knows that there is a connection between hybris and nemesis, correct?
Hubris and nemesis?
You call it hubris. Okay, it's ivris in Greek. Because it's a Greek word, yes.
I know.
Hubris and nemesis.
You guys invented everything.
Yeah, actually the chain in ancient history is that it's ivris atis nemesis thesis, which is very wise if you think about it. Hybris, hubris, you know what it is. Mm-hmm. Then supposedly the gods were sending people ati, which is blaring. So they made your mind go blur, and then you committed more hybris. And then nemesis was coming, and then thesis was coming, which this is the complete, destruction, the punishment.
Wow. Wow.
So if you think about it, the chain is even more complete, and it makes more sense. Yeah. So now that we learned some ancient Greek, let's go back to the.
I loved ancient history in college. I took so many courses. I loved it. All right, so this is where you're at in the pound. Someone's acknowledging your great work in silver. I think it's Arif.
Thank you very much. Let's have a look at it. it's not my good work. It's silver. I think Nicola also mentioned it yesterday. She said the following, that silver has been way more technical, and I totally agree. If you notice the levels, silver has been responding to the levels, in a great way. We said yesterday that this is an area of interest because the bottom of this area was the 61.8. And the middle of this area is, a place that has seen the market. You can see it even here. Find support and resistance multiple times. So I was really monitoring this area. I did not take a long from this area, but depending on what happens to today's reaction, I might be involved with a long side again. So yes, the level I had marked worked perfectly. Having other dollar exposure and the head of the Fed, I did not take a long here, but it does work very nicely initially. I mean, we did test this area, we are rebounding, but we are now again on another area of interest, which is the 1720 area. So it's important to see what's going to happen from here, because a rejection from here after the Fed, for example, strong dollar, as we said, that it is a good likelihood, will perhaps then open the case for an A, B, C at least, so another leg lower. So this is a very interesting area to watch as well. I mean, this is not the area to be long if you were not long from the previous area ahead of the Fed, for sure.
Yeah.
So if you were long from this area, fine. You can do what Blake says that he did with gold, which is great trading. He now has a cushion of profit that he can say, okay, I'm going to use this cushion. If I get lucky and see more dollar weakness or anything else that might prompt a reaction that's going to be gold positive, good. I'm going to get more profit out of it. If not, at least I have a cushion and I'm only risking, what's a floating profit at the moment for me.
There's a new news flash, Steve, from the Fed, from Janet Yellen. Did you see it?
No.
I don't like the analyst yet. The analytics telling the community that we're only hiking so that we can have ammunition in case there's a problem. We're doing it for more fundamental reasons because the data is much, much here.
Honestly, Dale, first of all, that's a good impersonation, I have to tell you. And second of all, I have to tell you that I find it very hard to listen to her, honestly. I mean, it's almost annoying. I do it because I'm involved in the business, but I don't mean hearing you impersonate her, but really when she
Jess thinks it's sexy, so Jess lives in Canada, and in the winter it's like 100 degrees below, so he gets cabin fever. So that's why it's sexy to him. All right, anyway, go ahead, man.
Yellen, I mean, her voice.
Sorry, we got to laugh together too, right?
For sure.
For
sure. We're 1.5 hours per day here, and this is not. We're not robots. This is not a serious TV show or whatever. We want to combine everything. I mean, people come here because they know we have a great company here. So we'll talk forex. We'll talk market.
I'll tweet Andrew saying get Yellen on Face. I'll send a tweet out, as you guys know if you follow me on Twitter.
Hello, Janet. I would like to interview you.
Yeah, I'm not. Yeah. I'm not bashful. I ask everybody. It doesn't hurt my feelings. If someone ignores my invitation.
I'm a good-looking fan of yours, and I would like to interview you in face. Please DM me for answer.
I tried to get Trump during the campaign, so I'm not bashful. I'll do that for you, Andrew. I'm going to tweet Yellen later on, and she's a little busy now. But
imagine if she answers yes.
Okay, it'd be great. We'll all grill her. All right, go ahead, buddy. Back to money.
Okay, back to the markets, and let's see things that are affected by will be mostly affected by the Fed's decision. So this is USD yen. So there are two things I was monitoring here. I also wrote it yesterday. First thing is we had this blue channel which held perfectly with the exception of this breakout, but then we retreated back into it, and we actually tested it again 3 times after retreating back to it, and
See how
successfully.
great false breakout trades are?
Yes.
Right when it got back in the channel, you never took heat if you acted that day.
Yes,
Maybe you would break even, you never took heat.
Indeed, and that's actually why I haven't removed this channel, because after breaking below it, we still showed that the market respects it. On the other hand, we had the bear flag here, which I've marked its target. Coincidentally speaking, its target is only 10 pips away from the low we saw back in April. So we have a bear flag target at 107.996, and the low was at 108.10. So there is a confluence of supports at 108 roughly. So this is an area I'm monitoring. On the other hand, this 112 area is an important area. So we are currently not exactly in the middle of this area, but anyhow, we are, in the middle part of this area. So Blake took a great short from here. Why? Because I'm also monitoring this red wedge that you see. On the other hand, wedges like this are usually terminal formations. So I will not be looking in going long USD yen unless it closes above 112, but a strong USD reaction perhaps, so this is just a hypothesis, that will decisively break above the wedge and this descending channel is going to get me really interested. So it's going to get me in the mode of looking to buy the pair. A plunge, on the other hand, will, below the 108 level, will then get me interested to seeing what's going to happen, here. This is a previous zone of interest, which is roughly at 105.70. So this is the next target I'm going to be looking. So those are the things I'm looking for USD yen ahead of the Fed. So, if you agree with what you're seeing here, you have a set of levels in mind that you should pay attention to. And let's see what the reaction is going to be. I like reactions that don't match what happened. Or I like, initial reactions that get faded very fast. So I'm going to be very careful with reading the language that comes with a hike. Personally, I don't understand how Paul is so convinced that a hike is not coming. I believe that if the Fed doesn't hike, it's going to have a very serious credibility issue. This is going to be a very strong hit for its credibility, because you have Fed members that were coming out until a few days ago preparing the market for more hikes to come besides the one that we're expecting now. So if within a few days, after the market is constantly pricing in above a 90% chance of hiking, you fail to do so, then you have a serious problem, because the market is not going to be listening to you anymore, and that's something they definitely don't want to happen. So in my mind, the chances of an event that's not going to involve a hike are less than 1% for sure. But you never know in this life.
Looks like 108 is going to be pretty important, and
yes,
I like that
108 is important.
And I think Nick talked about that possibility. I know longer term she's constructive, so she's probably looking for a place to buy it. But you know what we have to keep on the table here now, Steve, is something you and I talked about a few weeks ago, that, the move from 125 down to, 108 was A, and then we had a B up to 114. And if we have equality, we're going under the November lows.
That's definitely
it's early to say, and and it was quite contrarian about a month ago. But now you have to be open to that possibility that we're heading under 100 in the end.
That's definitely a chance. But you know something, Dale? Today is going to be very important, because
every day is important.
What I would like to see today is clean moves with a lot of volume behind them. Because if that's the case, especially if we see a reversal of the initial movement, a lot of volume following, I'm going to trust the move we're going to see. You know what I mean? And I'm going to trust that the move we're going to see is also going to have some follow-through for at least several days follow-through.
I have trust issues with markets. So
nobody can blame you about that, right?
At times with my decision-making capability, but I'll go on. I'll go with trusting my eyes more than trusting the market. What do you think?
Levels for people to watch even closer than the ones I said, which are general, are 108 on the downside, and if you want another level below 112, it's this one, 110.50, 110.50, 110.60, 110.70, that area, those 20 pips of area, have also, look at this, they have been respected here that we created all those weeks. Nice. They have been respected here, 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 this high here. So the first resistance to watch is 110.50 to 70. So now you have the levels, what's the reaction, so you can know, I mean, if you like one of those levels, you can go against it, because those are levels that, you know, the market has shown some, let's call it memory. Now, Blake already spoke and briefly showed the treasuries.
Memories.
Treasuries are actually now, I have now tested today the 38.2 of the whole move lower. There is the potential that we have some kind of a wedge here, although it's not so clean. I mean, only 2 points of reference, so it's more indicative. It's not that I see this pattern and I'm a true believer in it. So just, you know, don't...
It wants a 1.272 and the 61.8. And that's going to be the bond short of the decade, according to Dale Pinkert. And this is not a new idea. So I've been looking for this. There's a gap on the TLT that would be filled there at about 130. So that's my target. So that also augurs for 108 sooner or later if this is
definitely. Those two will move in tandem. There is no question about it. It's exactly as you said it.
And sharply higher gold and with that happening too.
For sure, for sure. Precious metals in general are going to catch a strong bid if that proves to be the case. Now, I've seen people asking about USD CAD and oil. Let's take them one at a time. Anyhow, they're...
Someone's asking when would be a good time to buy Canada. I think we talked about 122.
I'll show you. So let's go on with oil. This is what we expected back then, the previous week.
Yeah.
The reaction higher has not been strong. It has not been fast. But you need to respect the possibility of a further rebound as long as this area, which is around 45.50, holds. I'm not going to lie, I don't see any strong reaction. I would have expected a stronger reaction than this. But for sure, as long as this zone is holding, there is the possibility of seeing a reaction higher, which should not surpass the 49 level before we see another leg down. So I'm medium-term bearish oil, and unless we see a move above 49, but I still believe that the reaction higher might have more legs to run. We're going to see. I'm not involved here. I have no position. So that's the situation with oil. Now, having to do with CAD, you remember I was quite convinced that CAD has broken, and I'm still convinced. This bear flag has a target of 131.40.
Broke two lines in 3 days.
Yes. I mean, and, you know, I found it surprising that the market gave so much of a time for people to understand this is a bear flag here. This was actually amazing.
I think we talked about that, especially when oil was getting cracked and we couldn't even rally to 5.5.
Yes, so what we had here in the correction is roughly two channels. One channel this and one channel this. And I've said many times, and we also have this trend line here that goes, takes into account the lows, which we have actually broken below it. Today's close, if we don't see dollar strength, today's close today potentially below this trend line. And in general, if we actually manage to hold the 132.80 zone, which I've marked here, is going to be very bearish, and I'm sure that in this case, Greg, I would tell you that it's a 1, 2, that will be a 3, so as a 3 you would expect a bigger reaction, then we expect a 4, a 5, but the most important thing of all, if that proves to be the case, is that we will have finally seen a 5-wave move lower after this impulsive move down. Right. So this is going to be
so
another
proof that it's just starting.
There is a chance that it's just starting, yes. A confirmation, we will have a confirmation if we manage to hold the 133 level at any rebound.
I'll be back in 3-4 minutes. Helene Meisler is in the house, and I'll get
and I'm really looking forward to,
Meisler, she's a market veteran. I've interviewed Helene before. She, as well, she's a contributor to realmoney.com. which is a pretty good site, and looking forward to having a conversation with contemporary Helene Meisler in about 4 minutes. Stand by. Go ahead, bud.
Okay, good. So let's have a look at other positions. This is another position I'm keeping, obviously, because it's not directly correlated. It's EuroCAD. I will probably soon trail my stop loss into my profit. Today we're seeing a strong reaction. This is a nice hammer, but it's still early in the day, so I'm going to monitor what happens from here and see what I'm going to do with my profits. So, and somebody before actually asked, I just remembered, somebody asked for KiwiCAD at the beginning of the webinar, but Blake was speaking, I didn't want to interrupt. So let's have a look what's happening with KiwiCAD. Okay, let's zoom out and see the bigger picture here. KiwiCAD had a huge triangle. There it is. Lasted for quite a bit. Then it started becoming more choppy. But within this choppy, let's say correction most probably, because it was a correction from up here, I see a clear potential of an ABC, and we're breaking out. So if you ask me, I think that for the time being you have no reason to be short this. And look at today. Today it's an outside bullish day after 3 weekdays, of course. But I mean, this area, for example, is an area of support. No reason to be bearish for the time being, and especially as long as this lasts, because I'm seeing this as a move higher and then a correction and then perhaps another move higher. Not so clean in general. I mean, it's not one of the setups I would actually decide to trade now. But you know, if you're asking me if I would be bullish or bearish here, I would be bullish from what I'm seeing. AussieCAD, we've had this conversation yesterday with Nick. That's even more choppier because we've had a triple top, let's call it here, or you can say that it's a double top and a double top, you know, no matter how you want to see it. And we've also had more or less almost a triple bottom here, because if you ignore the wicks, this is what I'm seeing as well. So for the time being, what you can say about AussieCAD is the following. You have a very well-defined area. It's the area between 1035, let's call it roughly, and 99.50. So as long as this area is holding, there is no trade. I mean, yes, you could have gone long yesterday, hoping that it's going to last one more time, or if we retest it for the 4th time, you have a good risk reward to go short 1034. But you know, not much to do here. Not much to do here. You can see it. I mean, before that, the pair was actually moving, you know, quite clearly. It was taking a direction and then moving for a decent amount of time towards there. But now it's just shopping around. So just watch the levels and, you know, trade the levels.
Okay,
Dale?
buddy.
Yeah, I'm just okay.
I'm going to make Helene the presenter, or I'll make it.
So good luck with the Fed, everybody. You know, don't take too many risks, and don't be very fast to jump on board a trade unless you're sure that, you know, the initial reaction is the correct one. But for sure, if you don't see any dovish language, keep in mind that the risks are to the upside for the dollar. Only if you see very strong dovish language, you should really trust another weakening move for the DXY. Okay, thank you, Dale. Enjoy
Use less leverage when you trade the Fed. Use less leverage or your account might be dead. If you use max leverage and try and turn $100 into 10K, your account may go away. Go away, go away. Remember that, everybody. I know it's hypnotic. How are you, Aline? And you are the panelist. Waiting to hear your voice.
Can you hear me there?
I can. I could hear you loud and clear, Helene. Hold on. Let me just share my screen, because you sent a couple of real nice, interesting charts, relevant too, with what's happening with the dollar. So here we go. So everyone, Helene Meisler is a veteran market watcher. I think that our careers, you had a better career path than I did, but you were with every big elite commodity clearing firm that I could think of in the old days, Helene.
I wouldn't say that.
Oh, come on. I think they were all, even the best went away, right? In this environment. But if you could see, I'm showing the dollar chart, and we're now at new lows. So I'm interested, since I know you're a market watcher, but probably with an emphasis on the stock market. Am I correct?
Yeah, Dale, I've got a lot of feedback.
Okay, you sound fine to me. I don't know why you have feedback. Are you hearing yourself?
I am.
Okay. Well, if you could bear with it and just talk through it,
Okay.
No one else is hearing feedback here, including
Okay, I'll try.
All right. So why don't we start off with the Dixie? What are you seeing here, Helene?
Well, I had been looking for a head and shoulders bottom. I'm obviously not getting it.
Okay.
But I'm still of the mind that there's too much bearishness on the dollar, and there's a lot of support down here.
Okay.
So I still think that there's going to be some kind of a rally coming in the next week.
Okay, so let me ask you why we had that real nice bull market for the last couple of years, and we peaked at about 104, and we've been correcting. Actually, President Trump's been getting what he wants. I don't think it's because he asked for it, but Dixie down from 104 to here. What fundamentally makes you bullish the dollar, or is it strictly a sentiment play? Because we know there's, a week or so ago, bullish percent in the dollar on the DSI was like about 6. I mean, historic extremes. So is this more of a sentiment play, or do you have more evidence to back it up?
Okay, it's a little bit of that, but if you take the measurement from that swing from the February low up until the March high,
yeah,
that measures right around to this 97 area.
Okay.
Which is why I start to look for some kind of a decent bounce or low from this area.
Okay. All right. So it's mainly technical reasons for it. Are you expecting the Fed to go today?
I am, but that's only because everyone else is. I have no strong view. I'm not a Fed watcher. I'd rather just talk about what the charts and the statistics are telling us.
I know you are an interest rate watcher. I have a pretty good memory, like an elephant, and I remember our previous interview when we were talking about markets and what could change the bull market. You said you have to focus on interest rates. And we have one heck of a, I think, bear market rally going in bonds. They could retrace all the way back to pre-election levels. You have a view on interest rates and the bond market in here, Helene? You think that this is... Go ahead.
Well, I had been bullish of bonds for a little while now, and several months. And they do measure on the 10-year to about 2%. But more recently, I thought too many people had moved to my side of the fence.
Okay.
It got me a little nervous.
Okay.
So I think it's somewhere, I'll just say somewhere between here and 2%, I think they're going on the upside.
Okay. I concur with you. It's a big failing rally then from the highs that we had last year. I think the all-time low is 134 on the 10-year. But I use a TLT as a proxy. Is that what you follow?
I have.
Okay. Or do you use a yield curve?
If I look at the TLT, there's a measured target somewhere between 126 and 128.
Okay, and there's a gap.
We're almost at 126 now.
Yeah, that's what I'm looking for. Maybe that eat into that gap a little bit, and that could set up. It may take time to distribute after a rally like this, but what's interesting? I did an interview last week with Adam Button, and he started talking about how the Chinese were starting to buy the bond market. And I told Adam, and you probably remember this, that anytime the Chinese say they're doing something, it's so they say they're buying it so they could distribute, and if they say they're selling, it's so they could accumulate. I saw them move commodity markets for years doing that, and that could be also kind of the tail end of this bond move that the Chinese are buying. Did you ever?
Everybody talk their book?
Huh?
Doesn't everybody talk their book?
Yeah. Well, I mean, look, I knew guys, Helene, that were famous traders at the CME, and they would walk into the pit and start selling size. So everyone thought that they were getting short. And what they had done was they got long upstairs, and they come down to the pit, and it created liquidity for them. So you're right. People will talk their book to distribute or talk their book to accumulate. I saw it happen on the floor. So I'm sure big market forces like the Chinese would have to do that because they even need more size to sell into or buy into. So here I'm showing, looks like a relative strength chart between the Russell and the triple Qs. And if you could see the screen, we're approaching a black trend line. What is your interpretation of it? Is that the Russell has recovered quite a bit against the QQQs with that big decline in the FANGs last week, and the Russell finally kind of breaking out. I think Carter Worth showed on CNBC that the Russell was on the verge of a breakout. Looks like, at new highs, I guess you could call it a breakout. What are you trying to tell us here between Russell and the Qs?
Well, the story of this year has really been that the Qs have outperformed everything, but mostly it's outperformed the small caps.
Except Bitcoin.
Well, okay.
Oh, hold on, Helene. I know you write for real money, not crypto money. All right, so I thought I'd throw that out there. All right, so go ahead.
Anyway, so last week I noticed, if you notice that higher low where the red line is, where all of a sudden the small caps were outperforming the Qs, and this was well before Friday. It had started really the week prior, the first week of June. And then you see what happened in the, in the last 3 or 4 days where we've shot up into resistance.
Okay. So it's possible that, one thing that might support your bullish dollar case, I've noticed that when the dollar is strong, it's more supportive for the small caps because right? And when the dollar is weak, it's better for the multinationals So I don't know, do you consider FANGs multinationals?
I consider them in their own world.
I do too, yeah.
Okay. But in any event, if we look at this chart, I think we'll pull back, and I think we're going to make another try to the upside.
Okay.
And if we cannot get through this downtrend line, by the time the market gets overbought again, say in the next week or so, then we're going to go right back to the Russell going down again. And it would be actually quite fitting because the Russell is currently in a rebalancing mode for the next couple of weeks. And that's usually when the Russell peaks, is when the rebalancing ends.
That's a pearl. So write it down if you're a stock trader, to look for time periods where there's rebalancing in the indexes, and the pros know how to keep things levitating so they could make all the changes to the index. I wanted to see what your comment was. It became kind of a publicized position. I heard on CNBC right before this FANG break and Russell advance that hedge funds' favorite short was the Russell. Isn't that something? And then, do you recall that all the hedge funds were shorting the Russell?
I do see a chart on that.
Yeah, yeah. So so they're getting squeezed right now, and you think there's another squeeze to go, and then we'll see after a pullback if we don't break out. And even if we break out, Helene, can't this just be some type of correction between 113 and 97, and we could go to 106, 107, and then turn down again?
Sure, but to me, once you cross the trend line, the trend that's been in place becomes suspect.
Okay.
So if you cross that trend line, then this whole notion of FANGs outperforming everything else forever and a day goes away.
Okay, what did you make out of the speed and velocity of that decline on Friday? Did it make you yearn for the old days when there were more than machines around, where there might have been some market makers? And do you think that speaks to fragility of having the machines run the game? And
no, because I think markets actually used to work that way, where we had good old-fashioned shakeouts.
Okay, look, that quick.
And I really think that everybody has gotten so complacent that they think this shouldn't be.
Okay.
I mean, that's how markets work.
Yeah. So then you think one day there will be a bear market in equities because people that have been, huh?
In my lifetime?
Yeah, I mean, like, you think we'll ever, a friend of mine said, Dale, don't worry, you'll live long enough to see the tribulation. So, you know, and so far he's been right, but, you know, I'm wondering, you know, I've seen wave counts to 2,700 in the S&Ps. I've seen wave counts to 4,000 in the S&Ps. So it's very interesting. I would think that if we are going to get those higher targets, that institutions would generate some type of sell-off so they could get in at better levels. And do you think that the Fed is starting to get nervous about valuations? And I know we have bubble markets in real estate here on the coast, and we have bubble markets, like you said, in the FANGs. So you think the Fed's raising rates? We know they're not raising rates because the economy is too strong, correct? Why do you think they're doing it?
I have no idea. Again, I'm not a Fed watcher. I watch interest rates on a chart.
Okay. All right. So utilities, do you think it's strange bedfellows to see things like utilities being a leadership group with the market going to new highs? Have you seen that in your career?
Actually, utilities are a leading indicator, so to speak.
Okay.
So when utilities are doing well, you care about being on the bullish side of the market. But I would point out that the utilities with this move in bonds today aren't even making a higher high.
That's an interesting market event. I'm going to take a look at that later on. So Helene,
I call that a divergence.
yeah, a non-confirmation by something that's not confirming the bond move, which led it, and now is beginning to lag. Kind of a market message, market tell. That
Exactly.
So here's another reason why I love doing interviews, is that I learn from people all the time by talking about them. And I know that you're probably active on Twitter because you and I, we each only have two eyes. And there are so many talented people out there that have great insights and perspectives, which I include you. In fact, one of my team members is a big fan of yours, Nicola Duke. Yeah, Nick does the harmonic work here at ForexAnalytix. She's great, and I told her you were going to be on, so sure she's listening. And I want to thank you, Helene, for going through the trouble of, you're like me. I went, people had to drag me kicking and screaming into the 21st century with technology, and I struggle with it. I remember the first day I was trying to rehearse to use this go-to meeting room. I said, oh, I'll never get this. But, sometimes we have to push ourselves, and thank you for stretching and sending us some charts, and appreciate you being here, and a couple of nuggets that you gave the community. Look for rebalancing, and you're pretty near the end of the move, and the fact that utilities are not confirming this move. I'm going to start keeping an eye on that. So I appreciate you being our guest today in Faithfully.
Thanks for having me.
So everyone, Helene Meisler, you could follow her at H Meisler, that's MEISLER, and you write a daily column for realmoney.com?
I do.
And can you just make one comment about what's happening in crypto? I know you have at least a reaction.
I can't because it would be wholly uninformed.
Okay, all right. Anyway, thank you so much, Helene. Have a great trading year, and appreciate you edifying our community today.
Thanks so much.
Thank you, my trading warrior sister, Helene Meisler. Thank you, FACE members. Good luck in the Fed.
Because all I did is hear myself speak on feedback.
Thank you very much, Helene. You could just hang up. Yeah.
And
I want to thank Blake, and I want to thank Steve, and thank you, Ben. See everyone tomorrow. Good hunting into the Fed, and remember, don't just count your pips. You should count your blessings. Let's see. It's not on there. Okay, everyone. Adios. See you tomorrow.